All right. Good afternoon. My name is Alex Pavia. I am the RVP of Enterprise Sales here at Demandbase. And today I am honored to join forces with our partner, Eric Feige from VShift. And I'm also joined by a few different practitioners from our space, Riham El-Lakany and Jim Casey. And actually, in my first 4 years here at Demandbase, I actually covered the financial services vertical and had the pleasure of meeting, Eric, Jim, and Riham during that time. So today, our webinar is going to be focused on digital transformation and account-based strategies within the financial services industry. Before we get into this webinar, just a few housekeeping items to cover. We're going to have a Q&A portion at the end of the webinar, so be sure to input your questions in the question box on the screen. We'll likely not have a chance to answer them live, but we will follow up with everyone who submits a question once the webinar is over. And of course, we're recording this webinar, and it will be available on demand a few days after the published date. So with that said, let's get right into the webinar, and I'm going to turn it over to Eric.
Great, thank you, Alex. The focus here is digital transformation and really account-based engagement, which is Demandbase's specialty area. But we're going to focus in on a few important topics and use cases within broadly financial services. Specifically, we're going to get into asset management, into retirement and annuities as a sector, as well as insurance and banking lending as a few different examples, so that you, the audience, within the broad umbrella of financial services, have specific use cases, and we can dispel certain myths and make the application of account-based engagement more relevant for your existing programs related to digital transformation. So I've had the great fortune of working very closely with Jim and Riham, both as colleagues and clients. A little bit about myself before I turn it over to Riham and Jim for presenting their profiles. I've been in digital transformation for quite a number of years, a few decades, in fact, of introducing new ways of growing and organizational change to teams and functions that are looking for to really use digital channels, data, increasingly artificial intelligence, to really grow and change the way that they pursue growth through digital technology and data. I've been a head of digital for companies like Prudential Financial, JP Morgan, and quite a few other types of professional services firms. And I'm currently a managing director with responsibility over strategy and growth for VShift, which is a Demandbase partner. Riham, I'm going to turn it over to you. Like I said, we've been colleagues and also a client a few times over. Could you tell our audience a little bit about your background before we get started into these use cases?
Yeah, sure. I'm happy to, Eric. And Alex, thank you for inviting us to be presenters at this webinar. It's a topic near and dear to my heart. I have been a marketing and communications practitioner, leader in financial services for over 22, 23 years, something like that. And then made a pivot and worked in healthcare marketing and communications as well. And I have worked with Eric and with Alex in my roles, had the opportunity to launch and implement several account-based marketing programs. And I find that the topic is very interesting and very informative for financial services, because there can be sometimes some myths, misconceptions, or even resistance to thinking about and implementing account-based marketing. So I'm very excited to be here, happy to share my experiences. Hopefully the audience finds some of them relevant and helpful as they tackle these issues. And I guess I will turn it over to Jim, who's also a former colleague, and for him to introduce himself. Jim?
Thank you, Riham. And again, thank you. I'm going to echo Riham and thank Alex and Eric for inviting us. Like Riham, I've been in financial services marketing for a couple of decades and have had a number of different roles in channel, in brand, but also in digital and digital transformation. I have also led the charge to implement account-based marketing at a couple of different firms. And I've been in both insurance and in asset management. And so I have a lot of experience in terms of navigating different types of companies and cultures, as well as challenges that are pretty universal to every kind of company. So I'm looking forward to talking about that with all of you today.
Great, thank you, Jim. So, this focus is really of what we're going through is really about digital transformation within different financial services sectors. This is a big topic. Digital transformation spending is forecasted to reach $3.9 trillion over the next couple of years. So when we're talking about trillions of dollars being invested and spent on technology providers like Demandbase and consulting firms like VShift, this is an important area. And part of the reason we wanted to talk about these use cases in these financial services sectors is because account-based engagement, where we have business to business and often business to consumer or investor or policyholder or pensioner, these are complex capabilities that use data, they use digital experiences, they're part of a marketing technology ecosystem. So Demandbase is really squarely a enabler and critical part of digital transformation. And one of the myths that we wanted to bust or address is that really a solution set like Demandbase fits within a larger digital transformation ecosystem, probably shouldn't be considered a ad tech or marketing service only, but rather there's an awful lot of value and growth that can be attained by account-based engagement as part of your overall digital transformation strategy. And we're going to go through those elements right now. So one is, and I'm going to turn this over to Riham, is focused on account-based engagement doesn't necessarily need to be focused on a massive volume of accounts. Rather, there's an applicable use case for being highly focused on a priority set of accounts that can disproportionately win business and grow. Riham, can you tell us a little bit about pension risk transfer and the model?
Yeah, absolutely. And so I think everybody is familiar with Prudential. Long history of being an insurer and an asset manager as well with the PGIM arm. But one of the products that Prudential has that not a lot of people know about, or if they know about it now, they didn't know about it back in around 2008, which is the pension risk transfer or a buyout. Basically, it's selling a very large annuity to a company that has a defined benefit plan and taking over the pensioners into the Prudential world as annuitants. And when I joined there was a lot of momentum behind this product, the buyouts. However, we weren't getting a lot of traction in terms of the marketing efforts. And so one of the things we looked at is, who are we marketing to? And how are we doing that? And the reliance at that time was on a pretty small group of client relationship managers or sales, really. And their focus, as well as all of the marketing efforts focus, were on CFOs as the primary driver of this decision. However, as all of us marketers know, especially in a B2B environment, it's not usually one decision maker. And even if it is one decision maker, there usually are influencers. And so what we brought about was a broader view of an audience and therefore more nuanced messaging. And so we started looking at HR executives, for example, or practitioners, given that they deal a lot with the defined benefits plans, with the pensioners, with those that are going to retire. We also looked at the other C-suite, chief risk officers. This is a very could be a risky transaction, and so on. And so realizing that we needed to reach multiple audiences within our select group of companies that we were targeting, and realizing that our relationship management team isn't that big and they don't always speak the language of all of these different audiences, implementing an ABM program whereby we can reach the different audiences within a specific company and message them and educate them in some cases in a way that is very relevant to them, and was incredibly helpful. I'm not going to say that the result of our efforts is the $25 billion buyout, but it definitely helped. And as we closed that GM historical, really, transaction, one of the things we did was work very, very closely with HR. And so having had contacted them through ABM made it a lot easier to work with them. They knew a lot more, and that facilitated the transaction. Likewise with Verizon, there are many other transactions, but I obviously wanted to highlight those as those were the largest two transactions that occurred in that space, in that market. So partnering with consultants, with using the right technology, definitely helped in reaching our goal and in reaching multiple audiences within our target companies. I don't know, Eric, if you wanted to add anything about your experience working on those deals.
I sure will, and I'll make this relevant before going on to an asset management case next. But a couple of things you said, which is there's a diversity of audiences in the Demandbase or ABM consulting or digital transformation vernacular. We call that a buying group. So who are those HR executives, the consultants, the CFOs, the COOs, and how do we take something that's quite complex and we make it simple and relevant? So in this case, there's a definite use case, and I'll just move on to a couple of examples of demand-based screens. So the idea here is myth busting. You don't have to have a large number of accounts, but we're talking about massive size deals and a traditional, very carry your bag, meet with the CFO, meet with a consultant way of educating, having follow-up meetings. In this case, what you're able to do is educate them, engage them, be very targeted with maybe a smaller number of accounts. In this case, you can see, are they going to your site, GM, Verizon, a consultant like Mercer, or other deals that had happened like HP and IBM with this pension risk transfer, this buyout. One thing I wanted to mention here is not only can you augment your traditional way of educating them, of getting the team members, including the third-party consultants, the head of HR and the CFO, kind of aligning on, hey, this probably makes sense if we shift essentially the pension obligation to a firm like Prudential that's designed to handle it, and it begins and augments what's otherwise happening. Another important part, when we talked about ABM and ABX, account-based marketing as well as account-based experiences, and one of the things that we did was designed a website for General Motors so that those annuitants or those retirees could come and understand in an account-based experience, an ABX tailored environment, what does this mean to them? What can I expect with a message from the CEO? So that is a very relevant example of not only using ABM, but taking it a step further as part of digital transformation to a very personalized and relevant account-based experience. So I just wanted to share a few screenshots before moving on. Riham, if that's okay, to the asset management use case?
Absolutely.
Great. So Jim, as head of digital marketing at PGIM, can you tell us a little bit about a scenario within an asset manager?
Yes, absolutely. So during my tenure at PGIM, which was going on a decade, we grew to join the top 10 asset managers. And that was quite an accomplishment for our firm. Prior to my tenure there, a lot of the marketplace didn't even really know that Prudential had such a large asset management business, but it certainly does today. And part of the success was due to the fact that we were reaching out to our client firms and our business partners using account-based marketing practices. The way that you sell mutual funds when you're an asset manager is through wirehouses, through RIAs, through banks, through IBDs and other types of firms. Merrill Lynch is a great example, UBS, Wells Fargo, Edward Jones, et cetera. But when you are marketing to the advisor community, it's critical to understand that first and foremost, they have a preferred way of getting communications. So the home office of these firms tends to curate what these folks see. And in addition to that, there are lots of firms that are trying to reach these folks. So it's a crowded marketplace. There's lots of noise. There tends to be a curated view. And what's important when you're an advisor to know is, how is this particular fund, how does it fit within the portfolio that I'm trying to construct for my customers? So there are a lot of challenges in terms of communication. And what has been great about using tools like Demandbase is that instead of just relying on the home office or known email addresses or the usual suspects to communicate to, you can really use the tools to communicate to the advisors where they're at. Meaning if they're on ESPN, or they're on a banking site, or they're on Amazon or what have you, you can target communications to reach a much broader audience that you would not be able to do either with external wholesalers or through most of our traditional marketing means. As marketers, we all know that having clean, curated, well-managed data is critically important. But sometimes, it's out of your hands. You don't have the email addresses of every contact you want to reach, or you don't have a channel that is, often used by that particular contact. What's great about account-based marketing is it allows you to use a plethora of different channels and really, as I said, reach the audience where they're at and drive engagement. Drive them back to your website to learn more about the product. Drive them to a fact sheet to learn more about the product performance. Drive them to an interactive experience or a tool so that they get some additional value, or a white paper. So again, it's not all because of account-based marketing, but because of our pivot in terms of the way that we were engaging our business partners, we were able to grow dramatically, during the period of time that I was there. And by the way, because of that, when the pandemic hit in 2020, we were fairly uniquely positioned because we were digital first in the way that we were engaging with our customers. And not for nothing, we were number one in net positive flows in the entire industry during the first half of 2020. And part of that, again, was because our wholesalers, our internals, and our audiences were connected to us through digital means that would not have been possible in the pandemic, because, as we all know, wholesalers couldn't get out to meet with clients to spread the word of what we wanted to communicate.
Hey, Jim, that's great. I want to drill down on a couple of valuable features in the Demandbase platform based on what you just said. And that is what we see here in the screenshot is engagement minutes, or intent engagement minutes. So when you talked about, the third-party intermediaries or advisors, RIAs, broker-dealers, wirehouses, others, right? They're asking themselves, how does your fund, how does your investment product fit within a strategy? So
Right.
This is a really great example of using Demandbase and creating your keyword, your intent keywords around, why does this investment product exist? what strategies can it handle? How does it deal with volatility? And what you see by setting up Demandbase with an account that's segmented by RIA, by prioritized RIA, IBDs, wires, and so forth, and matching up their intent keywords, your messaging of how does this target date fund or this emerging markets product fit within what they're looking for already, so that you can message to them in a far more advanced and scalable way than the wholesaler or the individual salesperson can be. So like you said, truly innovative and at the right time at the pandemic when you're using this digital channel. Again, beyond ad tech, this is truly digital transformation capabilities.
And you're absolutely
Jim,
right.
anything to add before we go on to the next insurance scenario?
Well, I was just going to echo what you said. You're absolutely right. People don't buy funds just for their individual performance. They buy products that fit within a strategy and a portfolio. And so being able to key off of specific search terms, but also being able to drive folks back to tools that allow them to see how your particular fund fits within a strategy is critically important.
Got it. So before moving on, I'm just going to pivot down on this kind of highly engaged intent engagement minutes. Basically translates to your radar for the overall team to say, look, we're getting signals that this advisor has a deep interest in a product that fits this business strategy or their institutional client or family office need for, managing volatility, right? So it gives you a very clear signal of where to make your next call or your visit and talk through based on the data and the signals and what would be a high engagement minute threshold that's being achieved here. So Jim, if we could, let's talk about insurance scenarios, because there's a similar story in terms of growth that I think the audience would love to hear.
Yeah, it is a very similar story. Another challenge, in this case at a regional insurance carrier, was to try to get our messaging out about our flood product to over 10,000 appointed agents in the field with only 15 field salespeople. Sounds like an impossible task. And in many ways, it had been nearly impossible, because there's just no way to even visit all the agencies that we were trying to communicate with who were appointed, much less all those individual agents who are often out with their clients, which is where they should be. Using Demandbase allowed us to target specific, not just firms, but agents, but agent offices, so that we could then reach the agents at those offices, because we were looking to sell flood insurance by specific zip codes. We're not interested in selling flood in high flood prone locations. So we were targeting very specific geographies and zip codes. And using Demandbase allowed us to really laser focus our messaging to agents that were writing policies in those target zip codes at agencies that were already appointed. So this wasn't cold prospecting. This was trying to get folks that were appointed to start writing business with us, and also get them to write more business with us. And it was very effective. And the other thing that I want to emphasize is this was done in partnership with the sales organization, with the field team. So we defined and designed the entire campaign hand in glove with that organization. And we're really seen not just as a fellow function that was successful, but as true partners with our distribution arm to be able to drive growth for the business and achieve the enviable status of being number 3 in the industry in terms of flood policies written.
Great. And Jim, there's certainly a part that jumps out, which is also a lot of insurance employers are trying to do more with less headcount in particular. One thing that you're talking about here is really being bionic and being able to do quite a bit more with a small amount of team. Is that right?
That's absolutely right. And any marketer that's in a role today will tell you we've got more work to do and fewer people or flat organizations to do it. And the volume of work is just going through the roof. And it's complicated. It's complex because you need to get your unique voice and message out in a very crowded marketplace. So using tools like Demandbase allows you to really, as I said, laser focus the message to the right audience. It's really bringing to life the vision that all of us have been, trying to attain of the right message to the right person at the right time. But also in the volume that is necessary to be able to grow, because the growth that we experienced at both of these companies was, one by one. But as you start to get those onesies, twosies, tensies, hundreds, you start to get real volume and achieve some of those really, substantive results that I talked about.
Terrific, terrific. So just moving on, and we're talking about sales enablement, Jim, and working in collaboration with the field, with the sales team, which is really quite important in making this a more transformative type of program. But this is one of the Demandbase charts here of ensuring that there's a well-structured campaign, that it be not only account-based, but you're thinking about the buying committee and the different geographies, the different roles, and getting very granular with who we're explaining and how we want to explain what is otherwise complex. In the pension risk transfer example, there's a lot of different parties that need to be, need to have the transaction and how it flows in a more relevant way. For an HR executive, it's going to be different than a CFO, and it's going to be different for the consultant. And then particularly with today's, emerging uses of artificial intelligence, next best action is, what do you want them to do? How do we know that they're booking an appointment, they're getting a consultation? And this is a good segue to the work at Freddie Mac. Riham, you're next, but as the former Chief Communications and Marketing Officer for Single Family, can you describe how the business works? And then I can kind of complement with some of the ABM, ABX programs that we did for ensuring adoption of certain products.
Right. And just to give everybody kind of a high-level overview of what Freddie is, because most people think of Freddie Mac and Fannie Mae when they think about their mortgages, and that's absolutely true. Freddie Mac doesn't originate loans or mortgages. They don't actually transact with a home buyer to give that home buyer a mortgage. What they do is, after the mortgage has been made, Freddie Mac buys, in essence, that mortgage, or insures it, if you want to call it that, from the originator. And so obviously Freddie is a really large organization. Some of the stats are up there. The portfolio is over 3 trillion. I think it's 3.5 trillion at this point. But then when you think about the mortgage industry as a whole, there are many institutions that originate mortgages. So most people are familiar with the big names, the big banks, or someone like Rocket Mortgage. But then there are all of these credit unions or development type organizations, financial organizations that also originate. And at Freddie, there's definitely coverage and a very formal client management and sales structure that focuses, for the most part, on providing one-on-one coverage to those larger originators. Again, the names that everybody knows: Chase, Rocket, which is a very large mortgage originator. But when it came to what we would call the smaller accounts, and in fact, the name at the time was unmanaged accounts, there were about in excess of 1,000 institutions that also originate mortgages, but they're not large enough to warrant one-on-one coverage. We simply didn't have enough salespeople to do that. And if you look at Freddie's portfolio, you kind of want to balance also what you have in terms of exposure to the large banks as well and lenders, but you want to balance that with having a more diversified portfolio. So having relationships and business with those smaller institutions that also originate loans. But there is no coverage there. And market share was lower for Freddie within that group than it was with a competitor. And so one of the things that we did to try to balance that was to initiate an ABM as well as ABX for those unmanaged smaller accounts and effectively manage them through some tools, digital tools that is. And within those smaller institutions too, I'll go back to that kind of that buyer group, as Eric mentioned. There is the group that we would work with as Freddie. In some institutions, it's so small that the person that manages mortgages is also the person that underwrites them, is also the person that needs to know about the technology coming in. But in others, they're large enough where you have multiple roles within that institution as well. And so we got all of this knowledge together and implemented the program. And I'll leave you to talk about more of the implementation, Eric, but I will say that the headline, and I buried it a little bit, is that we moved market share from in the 30% to well over 55%. I don't have the exact number now, but it definitely, when I was there, when I was leaving, it was about 55%. And that's a huge swing in terms of the position of Freddie Mac within that segment. And our partners in sales, we're very, very happy with the work we did because it saved them a lot of trying to manage a large number of clients without having enough of a sales force to provide that personal one-on-one type relationship. So, Eric, if you want to talk a little bit about what you did and how you helped us with this.
Absolutely. And I think we're going to go to questions here pretty soon, but I want to reinforce when you're talking about that dramatic market share change, that's truly transformation. And no organization does transformation just for the sake of change. You do it to grow and to grab that type of market share. So what's important here is that we've got diverse audiences within the lender community, different types of lenders. You've got a key decision maker, you've got underwriting, you've got the loan officer. And some of the examples here are creating not only the website or the digital experience that they'll land on, but through the account-based engagement and the demand-based supported advertising, is that we're giving the right message to the right person at the right time, bringing them into essentially a conversion funnel and getting them to book appointments. As you had mentioned, they're unmanaged, so they didn't necessarily have a lot of dedicated sales support. But what you now have is a change from an outbound model to an inbound model that's fueled through this demand-based or account-based campaign, which is truly transformational in terms of the results. For this particular product of, let's call it a technology adoption, you have appointments being set that are highly qualified. They've read the material. They've been engaged both offline through the ABM ads as well as through the on-site experience before clicking to say, yes, I'm ready for an appointment. And that moves the needle for the whole organization, not only in changing kind of the growth and share metrics, but also a new way of working more collaboratively with marketing and sales being kind of one combined unit as opposed to separate groups. So I think we're going to move on to questions. Let's see, to the Q&A. We may not be able to get to all of the questions. We're at the 34-minute mark. Question number one, this seems complicated and time intensive. Do we need to add headcount to accomplish some of the results like these? Business is sometimes complex. And I think in each of these scenarios, Jim and Riham in particular talked about maybe a handful of different audiences. So that's part and parcel part of the business and going to market and understanding who are your different audiences, how do you take something complex and make it relevant to them. To be an effective business, you need to do that anyway. Working with Demandbase and a Demandbase partner like VShift, you don't need to add the headcount. In fact, in many of these cases, we're able to use more of a self-service advertising model that gives the client organization the ability, along with a partner in Demandbase, to get those display advertisements out more quickly as part of your overall digital marketing team, and not having to go out to a third-party media company. So yes, it may seem complex, but it is easier than you think when you have a well-designed campaign with an understanding of who the key audiences in that buying committee are and what's going to move the needle, so with the most relevant messages. In the interest of time, I'm going to go on to question number 2. I anticipate an objection from our sales organization. How is this different from what the team is doing? How do I get my field sales team enrolled? Jim or Riham, either one of you want to take this one on first?
Yeah, I'll just start, and then Riham, chime in. In my experience, like anything that we do as marketers, the best outcomes are when you partner in the design and definition phase, and then all the way through with distribution, whether it's the relationship management team or the sales team or what have you. So, we were successful in a couple of instances, but it was always because we aligned on what are those objectives that we share, that we're trying to achieve for the company. Is it sales? Is it number of new customers? Is it number of activations? Is it number of policies or funds sold or whatever? So whatever the metric is, aligning on what are the KPIs that you're driving to, and then working hand in glove to really define what that entire campaign is going to look like, because the best campaigns are ones where multiple organizations have a role, whether it be product or operations, in addition to sales and marketing. Marketing generating a bunch of leads that are then thrown over the wall to sales is not a good practice. You've got to have a way of really nurturing those experiences and engagements along the continuum. And so, in my experience, that's where I always start is, first selling the vision and the concept to the head of distribution or whoever my business partner is, and then working really with them in tandem. And then as a result, you have pretty seamless, partnership and much higher engagement as a result. Riham, did you want to add your own experience?
I think you gave a very thorough answer, and I completely agree with you. The collaboration is so important to make this work. I'll just add another idea or something that we've tried, and Eric knows this well because we've done this with VShift multiple times, which is kind of the concept of a beacon project, where you take, let's say, one product in particular, one geography, and you prove out the effectiveness of what you're doing. And it is amazing how when you do that, everybody wants the same thing when they see it, and when they see that it has been effective and successful, they want a part of it. And so maybe starting with a beacon, not a POC, so it's not just a proof of it, but it's an actual tangible result, but one that can be scaled up. I think that has worked well for us in the past with ABM and ABX as well.
Great. And in the interest of time, and I think we're almost at the 40-minute mark, so I'm going to go ahead and answer this final question myself. But it's, how can I execute a program like this, account-based engagement, while maintaining compliance? So broadly, we're talking about digital transformation in financial services within these sectors. And we see account-based engagement as a fully integrated part of your digital experience platform and your digital channel strategies. So within the compliance function, the control functions in asset managers, insurance companies, banking, lending, and so forth, we treat the copy that we've shared really no different than producing web content or posting your social media content and going through the traditional process. So account-based engagement, when we think of it as a fully integrated part of your digital ecosystem and your content workflow, works really well, because as you had said, Riham, the idea here is that you do get started with a beacon project, but fairly quickly, when you start seeing the business results and the outcomes, this starts turning into, or should turn into, an ongoing program for augmenting what you're doing today, but doing it at scale with measurement, with a level of AI intelligence to drive the results. So it's really quite easy when you treat the demand-based program as an integrated part of your digital ecosystem. Jim, Riham, do you have anything to add before I turn it over back to Alex?
I would just say on that point as well, I'm echoing what Jim said about the collaboration partnership with sales. I think, and we all know this, as marketers in highly regulated industries like financial services, it helps to also bring compliance early on into the process and collaborate with them as well as IT, because as you said, Eric, this isn't a standalone. This should be something that is part of your overall digital ecosystem. And so having IT and compliance at the table early on makes it a lot easier to implement and to be successful.
Terrific. Hey, Alex, why don't you help us wrap up here?
Yeah, so I've been here for 9 years. I've seen the account-based marketing, account-based experience space, really scale over those 9 years, and really kind of go into verticals outside of the tech space, right? And really see a lot of success in verticals like asset management, insurance, real estate, banking. And you know what? None of that could be possible without really great clients, really great partners. So I really want to thank, Eric, Riham, and Jim for your time today and the effort in putting this all together. So with that said, I think we're going to wrap up, and I hope everybody has a great rest of the week.
Thanks a lot,
Thank
Alex.
you.
Thanks, Eric.
Okay.